All right, so GameStop Q2 earnings are out, and we've heard about now an FTX partnership. I'll read more into that, dig more into that as time rolls on. Of course, nothing I say is financial advice. These are just my personal thoughts and opinions. But top line revenue was down. That was a little disappointing to see. But I think when you look at the economy as a whole and the fact that people are just spending more on what they need rather than what they want, and there's just the general way things are right now, I think this was not totally unpredictable. I was honestly expecting it to be more. A little bit unfortunate there, but that's all right. Just trying to keep it honest here. I saw a lot of other good things, right? Considering they talked about continuing to grow with Loop Ring, Mutable X, two major partners for them. And now FTX is a partner, and we'll see what else comes there. They're going to continue to focus on profitability, right? Remember, those layoffs happened at mid-July, right? Something like that. I think it was like early July. The Q2 ended at the end of July. So selling and administrative costs were still kind of high. They'll be probably lower the next quarter considering they had those layoffs, right? Those are not yet accounted for. So yes, they still burned $100 million in free cash flow, right? They're still negative $100 million there. And that's what took their cash balance on the balance sheet from $1 billion to $900 million, right? But look at that. That's still 9 more quarters they could operate in the same way. But I don't think GameStop will be unprofitable for another 2+ years. That seems bonkers to me, especially considering they continue to create partnerships, they continue to grow the NFT marketplace, and they continue to get into Web3. And ultimately what I believe is they're trying to become the backbone of Web3 and the gaming worlds coming together. And I think they're doing that through the GameStop wallet, the GameStop NFT marketplace, and these partnerships that we're starting to see show up, right? And another one that I don't think is talked about enough, and I don't think we know enough about it, and we'll kind of see as time rolls on. There's one called NFL Rivals, and it's basically a game that's going to involve NFTs that have to do with football, right? The NFL, and it's an NFL official thing. So it's like, okay, that's a pretty big deal. So when you start to see names like this getting involved with GameStop, whether it's directly or indirectly, I think that's an exciting thing going forwards. And also they talked about how the liabilities are less on the balance sheet now than the prior year. So that's also an exciting thing. And just continuing to see the $900 million in cash, and they're not taking on more debt. I mean, who doesn't love to see that in a company you're investing in? Again, these are just my personal thoughts. I want to hear what you think in the comments below. I just try to briefly go through a bunch of things, and oh my goodness, I almost forgot one of the most important things. The DRS count, right? Oh my goodness, a lot of shares were DRS. I think the pre-split number, I hope I'm not wrong, it's just like in the 17 million. So post-split, that's like 60 something million. And when you look at the fact that now there's like a little over 300 million shares outstanding, we're getting close. I think we're at 20 to 25% of the entire existing shares. Not even the float, guys. The shares outstanding are being directly registered, and more people just seem to keep directly registering, because remember, the price has gone lower and a lot of individuals have bought more, including myself, since the price began to go lower, and a lot of time has passed since July 30th. So I'm willing to bet a lot more shares have been DRS since then. So again, just my personal thoughts and opinions, but I hope you have a great day.